After aligning with the higher time frame bias, the next step is to identify a candle 2 or candle 3 closure. This is how we can use these swing formations to develop a relevant swing point in the market and to identify when a reversal is going to occur. So you can see over here we've got a candle 2 closure. So we've got candle 1, candle 2, you get the failure to displace, we get the swing high being produced. So this can confirm for us we've got a candle 2 closure. We can mark out the high and the low of candle 2 and the equilibrium. And then we look to trade candle 3 in the lower half of candle 2 equilibrium. You can see price does break to the downside. We get that continuation. Then we mark out candle 3 equilibrium, high and low, and the equilibrium level. And then we look to trade candle 4 in the lower half of this EQ level. On the other hand here, we've got candle 3 closure. You can see we've got a swing high being produced in the market. We do not get a failure to displace with candle 1. So we wait for candle 3 to close below the open of candle 2. Once we get that closure or that engulfing candle 3, this confirms for us we've got a candle 3 closure. So we mark out the high and the low of candle 3, the equilibrium, and we look to trade candle 4 in the lower half of the equilibrium level. And then lastly, we've got candle 2 closure, but we're using a bigger wicks. So you can see candle 2, swing high being produced, failure to displace, confirms candle 2 closure. We've got a massive wick on candle 2, which is bigger than 60 or 70% of the whole candle. So then we measure the EQ of the candle itself. And then we look to trade candle 3 within the lower half of the candle 2 wick equilibrium. Once we see that trade to the downside, it confirms this continuation. Then what we do is we mark out the high and the low of candle 3, the EQ level, and we look to trade candle 4 in the lower half of candle number 3. Here are some bullish examples. You can see candle 2 closure, candle 2 swing point being formed, failure to displace, confirms our candle 2 closure. Then what we do is we look to trade number 3 within the upper half of the EQ level. So we measure the equilibrium of candle 2 and we wait for candle 3 to enter into this upper half for looking for an entry. Candle 3 breaks above the high, forms continuation. We mark out the high and the low of candle 3 and we look to trade candle 4 in the upper half of candle 3 equilibrium. Then on a bullish candle 3 closure, you can see candle 2 swing point is formed. It does not cause a failure to displace, so we wait for candle 3 to close above the opening of candle 2. You can see candle 3 engulfs candle 2. It confirms this candle 3 closure. So then we look to trade candle 4. We measure the high and the low of candle 3 in the equilibrium, and the upper half of candle 3 is where we want to look to take an entry into candle number 4. And finally, with our candle 2 closure bullish example, you can see we've got a swing point being developed in the market. It's a big wick, so we're going to use wick equilibrium. We get a failure to displace. Candle 2 closures, it confirms a candle 2 closure. So what we want to do is we want to mark out the equilibrium of the wick of candle 2 and enter candle 3 within that upper wick region. You can see price displaces to the upside, breaks the high of candle 2. Then we get candle 3 breaking to the upside above the high of candle 2. We mark out the high and the low of candle 3, the equilibrium, and we look to enter candle 4 in the upper half of the candle 3 equilibrium. A key important point to pay attention to is now when looking for a candle 2 or candle 3 closure, the most important thing is that it happens at a relevant level. This will be either at a fair value gap or a high or a low. And only if neither of the first two are present will an opposing candle be used. Swing formations at a fair value gap. So you can see over here, we get a swing low being formed, failure to displace, and then we get this massive displacement to the upside, which causes this fair value gap. Price retraces into the fair value gap, and that is our relevant level that we want to look for a swing formation to form. We can see there's a swing low being formed, failure to displace, which confirms a candle 2 closure within this fair value gap. So therefore, we look to trade candle number 3. For our bearish example, you can see we get this big bearish drop to the downside. It forms this imbalance or fair value gap, so we wait for price to come into this relevant level. As price comes into the relevant level, we wait for a swing high to be formed. We can see we've got a failure to displace, candle 2 closes. This confirms our candle 2 closure, and we can also see candle 2 engulfs candle 1, which is a stronger confirmation, and then we can look to trade candle number 3 if it respects the lower half of candle 2 equilibrium. We also look for swing formations being formed at high or low relevant levels. So you can see here we've got a low being formed. This is a relevant low level. Price comes down, taps into this relevant low. We see a swing low developing. It is a failure to displace. Candle to closes, which confirms a candle to closure, and then we look to trade candle number 3. For our bearish example, you can see we've got a relevant high swing point marked out. Price comes into that swing point. We pay close attention to see how does it react to that level. You can see we get this big wick being formed, a swing high being formed, a failure to displace, candle to closure confirmed. So we look to trade candle number 3. Let's have a look at this example on the charts where price is forming a swing level at a fair value gap. So if you can look over here, we get this big bullish run. You can see we get this huge imbalance being formed, this big fair value gap. We mark out that level. This becomes our fair value gap relevant key level. So all we want to do is we want to wait for price to come back into that level. See, price retraces into this level, and you can see we get a swing being formed. We can also notice it's a failure to displace from the candle number 1. And that for us lets us know this is a relevant place to look for a long position. We wait for a candle to closure, and then we look to enter on candle number 1. We measure out candle 2, high and low, and we want to see price respect the upper half, which it does with its candle body. And then we can catch this reversal to the upside. We can also measure the high of the candle that caused the manipulation to occur. You can see this is the candle that caused the sweep. We measure the high of that candle. As price breaks above that candle, it is confirming to us this opposing candle run as extra confirmation, which means we can enter on this next candle, candle number 4. There's many ways to look at this, but this is the sequence we look for. And you can see price goes up, it drops back down into another fair value gap. Can you see? I always mark out the 50% level of the fair value gap, and you can see it's respecting that level. Then we get a swing low being formed. We get a failure to displace being formed, which is a stronger confirmation for us. And this confirms for us that we can look for a long position. So this is how we use fair value gap entries. We wait for price to come into the fair value gap to form a swing or a candle 2 or a candle 3 closure. And that confirms for us to look for an entry. In this example, we want to focus on using a swing high and a swing low in combination with our strategy. So we mark out a relevant high and a relevant low point on the chart. We wait for price to come to these levels, and then we want to see a swing formation form at these relevant levels and looking for a candle 2 or a candle 3 closure. So I'm waiting for price to come to one of these key levels. I've marked out a low and a high of the range. I'm waiting for price to come to this key level. Let's see. Oh, there we go. You can see price taps into this key level. We get a swing high being formed. We get a failure to displace being formed. So this is our sign for us to look for a short position. And we can mark out the EQ of this big candle, and we want to see price respect this lower half of the EQ. We can play it out. And there we go. We see nice movement down to the downside. And let's see, is it going to go to our swing low point? So now I zoom out a bit and I just marked out this lowest low point. So remember, the lowest low and the highest high are always going to be the most relevant places to look for an entry. So even though we've got this low over here, we've got another low lower than it. So if price doesn't respect this low, chances are this will be a fantastic place to look for an entry. So let us see what is going to happen. Price comes down to this low. You see it breaks past this low, so it doesn't give me much confidence. So I want to wait for it to come. Although you can see we did get a swing low and a failure to displace happening here. I think this was a fake out because you can see it just swept out this fair value gap, which could have been a potential place to look for a short position or a continuation to the downside. You can see we cause the sweep, we get a swing high, we get a failure to displace. So this can be a potential to look for a short position. We can also mark out this opposing candle over here to confirm it. If price breaks this opposing candle, that can also confirm for us we're looking for a short entry. Price breaks, drops, there we go. That would have been fantastic. This would also be for us another opposing drop. If price breaks that low, and there you go, you can see price breaks that low. Then it drops into our key level. So this is what we want to focus on. Price has come into our swing low level. We want to wait for a swing to develop. You can see we've got a swing developing. We've got a failure to displace developing as well. So now we want to wait for a closure of candle 2 to confirm. Candle 2 confirms. We can also see we got candle 2 engulfs candle number 1, which is actually a stronger confirmation for us. So at this point, we can look to trade candle number 3. We want to see candle number 3 respect the upper half of this candle number 2. And this is where we will look for our entry to the upside. There we go. There we go. Very nice. So this is how we use highs and lows and fair value gaps to anticipate swing formations to form to catch a candle 2 or candle 3 closure.